break and you sell the 6 break. We don't buy the 13 break and we don't sell the 6 break. We analyze what that bracket is going to bring to us. And what was the analysis? The short sell on the 10s, 30s is preferred. However, the price isn't rich versus the curve. What does that mean? The price isn't rich versus the curve. In other words, we need the price to go up to give us the value we need to get that trade on, right? So I prefer to work offers into the bracket high. Bracket high, offers, not buys, sells. We know where the bracket high is, 13. So on the basis that I'm going to offer the bracket high, I'm going to be offering 13s and 14s, right? Well, 13s and 14s dropped down initially to 28s. We made ourselves a good solid $500 profit. And that's the difference between how we trade brackets and how anybody else trades brackets. We use them as questions, not answers. See the difference? A bracket is a question, not an answer. So welcome in, guys. Hope you're all good, ready to rock and roll today. And we'll obviously get pressing on as the day kicks into gear. We're sell side just now, S&P. Obviously, we're targeting that 43.70 bottom line. That'll give us a very nice $600, eventually a $600 sell side profit. There was a little opportunity to work short there, but it didn't do much and it scratched out. There was another opportunity to work short, which is currently in just now. It's not going anywhere fast, but it's a worst case scenario scratch trade. And, you know, obviously you're looking at the deltas just now. Look as if there's relatively good solid buy side. So it's going to be simply waiting for a lean, getting the sell in, getting your stops at break even and seeing if it catches any legs in the move. Now, is there a reason why it's not dropping? Is there a solid enough reason why we're thinking about what's going on in the background? Well, of course, all of these things will start to develop as we get into the US session proper. But at the moment, for me, in terms of structure, in terms of flow, in terms of your last night's classroom, it is sell side only. S&P, sell side only. Oil, and that's what we're trading at the moment. That's why we've made a fortune this morning. A fortune. Fortune on the RGL buy side S&P, a fortune on the S&P sell side London RGL, a fortune on the short oil trade, a lovely profit on the short bond. Life doesn't get any better. 100% winners, all tweeted in advance, all structured in advance, allowing you to get your trade-ons onto the right price at the right levels, and some great takeaways in terms of last night's classroom. So if you joined us last night, I hope you enjoyed the chat for what it was. I hope you enjoyed the chat idea and the kind of content that we're going to be doing this week in the evening sessions. We're going to be looking in detail now, of course, into these structural areas. And as we drive into those structural areas, we'll be focusing more now on the things like the trapped buyers and sellers inside of these little processes, the trapped buyers and sellers. So you can see that this process is still working nicely. The S&P has dropped off. So we've had two sells. The first sell failed to give us any much of a movement, and we got a little higher high here. So we got another sell in. It has driven away from that second short. So life looking okay so far. We're needing to do a little bit more from this, of course, a little bit more. Now we've got a new high that moves the measure. With a new high, of course, that takes us up to this print here, and that moves the measure down, of course, into this box here. So we're extending the scope of this based on the upside volatility. And that should be the normal balance area profile. If we're going to see a US change, of course, this is going to be the profile area where this is going to change. The POC of this profile will end up being around about here. The high of the profile will now be here at this point, and the low of the profile will be here. So we now have the basic idea. If we do get a change, this is how the change is going to form, correct? So in other words, we can build out the scenario, can't we? Yes? So what I'm thinking is that it's going to do this, 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 and if it's going to go bullish, then that. If it's going to go bearish, then that, of course. So this is how the whole thing's going to evolve, isn't it? This 3 might go higher, this 4 might be higher still. That type of idea might evolve. And obviously that's the basic throwback into this trade narrative at this point, yeah? Does that make sense to everybody? Now, that's only if we have a neutral structure. That's only if we have a basic idea of a neutral structure here. Then we can obviously kind of get a handle on how this is going to form. Very straightforward handle on how it forms. Now, obviously, 3 might come up into this area here. It might drop down into this area here. I don't really care where it goes. But the idea is at least we're starting to consider the scenario that's going to paint from these points. Now, the one thing that we understand about the Nash equilibrium is to break the Nash equilibrium, something has to fundamentally change. Now, you might say, but the price action has fundamentally changed. Well, it's not really changed by that much. You know, breaking this little level hasn't still brought any buyers at higher prices, has it? So we haven't really got the catalyst for change showing up just yet, have we? We haven't got the catalyst that allows us to make that play. Could that catalyst happen at 1:30? Could that be the catalyst that we're waiting for at 1:30 to maybe change the story? Could it be the cash market open? Could it be the NYMEX open that changes the story? Of course, the matrix, of course, hasn't lost on anybody at this stage. So the possible changes to this story take place where? Well, they take place in the matrix locations of 1330. They take place in the matrix locations of 1400s. They take place at the matrix locations of 1430. They may take place at the matrix locations of 4370. They may take place at the matrix location of 4375. So we can start to see where the matrix puncture points are here. We can start recognizing where these relevant little reference points start to appear on the screens, can't we? These are all areas that these things could develop from in terms of structure going forward. You know, we can extend out this idea, obviously, through this whole entire phase. We could say, well, if it's going to do something like this, it may do something along those kind of lines here. That type of idea there, couldn't it? It could evolve from that story. It could evolve from these ideas, and we could obviously end up seeing something like this here as well. We could end up seeing something like this. We could end up seeing something like this forming here, and it could hold into the cash market open. And then eventually we could obviously develop out through the cash market open with the bullish skew, of course. Because remember, what are we looking at? We're looking at that bullish skew, right? We're looking at the US dealers having a buy-side bias. So why are we constantly focused on this idea of the Nash breaking buy-side? Because we're looking for it, aren't we? We're actually physically looking for that strong bullish skew to show up that the dealers thought was going to happen, weren't we? We're looking for that strong bullish skew. We got it from last night's RGL break and we were long and we made a lot of money. But we're now looking for it again for today's US session. So we're already looking to try and figure out where this Nash equilibrium is going to break. That's why we're scoping it out. That's why we're searching for it as a scenario. That's why we're developing out these thought processes, aren't we? So we're thinking about this as a process. We're thinking about this idea, and we know that the price will puncture these as high volume nodes. So when this trades here, there would probably be a high volume node, which would be possibly, of course, a capping sell, but it might be new demand showing up. If it's new demand, then the idea is they'll take it down into the bottom bracket to accumulate a balance at lower prices. So there's a lot of possible ideas here, isn't there? There's a lot of possible ideas. We'd imagine there's going to be big volume here. We would imagine that there could be big volume at that point. We could imagine that there's, what am I doing? Keep picking up the wrong damn thing. So we could imagine that there's going to be big volume here as well. But on the other side of it, we would imagine if there's going to be big volume, it's going to be at that point there, isn't it? And if there's going to be big volume, it's going to be at that point there. So we're building the matrix around these pivots, aren't we? We're building the matrix around the future pivot prices that we all now know are visible on our screens. And that's what trading's about, isn't it? As a local on the floor, you know where these prices are based around. You know where these prices are located, and you start looking for those tie-ins with other things. What other things could we look for as tie-ins against? What other ideas could we look for tie-ins? Well, of course, the key dealer levels. Looking at the key dealer levels, we can recognize the 68 to 65. 68 to 65 is a major dealer level, right? It's the only major dealer level we have on the S&P. 68 to 65. What was the bottom of our bracket here? 68. So we've got a very, very important key dealer level in that price area. What other key dealer level did we highlight to you this morning? What other key dealer level did I highlight this morning? $43.82, right, Melvin? $43.82. So did everybody see where the big sale came from? From the London session? Everybody see it? I assume you did if you knew the price. Melvin knows the price and Laurie knows the price. I'm assuming you saw that sale came from 43.82, right? And that was at 11.50, right? So we know that was the big dealer price right there as well. But we knew that in advance. And that was not a shabby little trade, was it? That was not a shabby little trade. That was worth $500. That little sell trade was worth $500 just on its own. Crazy, right? Crazy good, crazy positive when we think about it. Anyway, welcome, guys. I'm going to grab a little bit of lunch, and then we'll hopefully get back into one of these trades this afternoon. Data out, remember, at 1:30 in 10 minutes, and then we'll get started the day proper. Welcome in, guys.